Let's take a look at some information and charts on Balancer for Brave New Coin. Balancer is a sort of DEX, sort of AMM, sort of portfolio manager trading platform. It does many things, most of them not particularly well, but it has continued to exist sort of without fail. They have updated it to version 2 a few months ago now. We can see volume fees, liquidity. So the numbers aren't anything to scoff at, certainly not a non-factor in the grand scheme of things. And how this works is you can set your portfolios to rebalance automatically based on certain criteria. You can set inclusion and exclusion criteria for investors or individuals looking to buy in the pool. And it's really as simple as that. They can be exotic and include some index against ETH and BTC. They can be 80-20, 60-40, 32-31, 64, whatever, right? It can be anything you want it to be percentage-wise, whereas you can't really get that anywhere else. You can't make your own model for AMMs. It's usually just a 50-50 split for anything on Uni or most DEXs. They also have BAL token incentives, which at the end of the day, if we're being honest here, all of the token incentives on any DeFi, anything, just hurts price because it increases inflation. And if we're increasing inflation without a reason to buy the token or hold the token, price tends to go down. And look at that against ETH. Look at any chart against ETH in the DeFi world over the past 6 months. There's been very little reason to speculate, very little reason to buy and hold this stuff from the governance perspective. So the speculative perspective hasn't done well because we're just continuing to pump more and more tokens into the ecosystem. Looking at the just baseline trading side of things, you can treat this as a traditional DEX and trade through it. They have a gasless option for ERC20 tokens. I don't think they have limit orders, but you can adjust certain parameters here, trade certain pairs through Balancer. And occasionally a DEX aggregator, if it's connected with Balancer, will include Balancer and Bancor and some of these other more exotic, lesser used DEXs into the calculations if the fees are low enough. But for the most part, if you're trading on Balancer, you have to go to the website to do so. It's not like it's hard to do, but it doesn't get included most of the time for me anyway on the DEX aggregator side of things. And you can just connect your wallet like anything else in the DEX ecosystem. If we look at the top pools by pool value, here's ETH, and I think that's wrapped staked ETH, WST ETH. And it breaks it down as far as the volume and the pool value and the APR. And then we can look at where that APR is coming from. Most of it is from liquidity mining, and you get LDO, which is Lido. So that is the staked ETH stuff. So we can add layers and layers of complexity onto this in order to incentivize people to use certain things and do certain things in certain places. So it'll pump up the numbers for the volume. It'll bring people to the table. But again, the token suffers at the end of the day, in my opinion, if we're just releasing more and more tokens in the ecosystem. In this case, it's LDO, which I don't know what that chart even looks like, but I'd imagine it's not particularly super mega bullish at this point in time. Only 0.6% of that is Balancer. If we go to some of these others, here's the 50-50 BTC ETH split. Swap fees 1%, liquidity mining, which is BAL, is 6%. And you can go down the list here and see all these. And some of these are on Curve, some of these are on other places, right? And you can get Curve rewards. So there's competing incentives there. It's a fun and interesting game to play as far as where you're going to park your funds. Are you going to calculate impermanent loss? All that stuff is part of the equation. But if we're just talking about BAL, the token, I think, yeah, this is detrimental pretty clearly. We can see what's happened against USD, against ETH, against BTC. None of these have done particularly well. If you look at DEX volumes, this is on the monthly basis. Balancer down here in the gray, not a giant slice most of the time. Many of these DEXs aren't a giant slice most of the time. Uni continues to just eat the world in volume on ETH anyway, and the market share just is rising. Month over month volume, rising. Uni's star could not be brighter, and yet the token doesn't look particularly bullish to me. It isn't mega mooning, right? There's a clear disconnect between what's happening on chain so far and what's happened with these tokens. Because if even Uni, the leader in volume, doesn't seem to be doing particularly well so far, then what hope does something like Balancer have, right? Where the volume is almost 3 million this month relative to Uni's 3 billion this month relative to Uni's 83.5 billion this month. So what's it going to take is my question, because I can look at all these metrics and all this stuff and nothing really seems to matter. We can look at TVL for Balancer is 13th on ETH. It is at 3 billion according to DeFi Llama. TVL across the board at highs here on ETH. Most of that is thanks to ETH appreciation. If we dig a little deeper on the Balancer side of things, TVL also very near all-time highs. Against ETH, it's flat and down, and it goes a little deeper than that. You'd have to look at individually for all of these. What is the TVL for anything that's listed here in the pools? What's important to pay attention to? Is it up in ETH? Is it up in BTC? Is it up in USD, right? What is this relative to the stablecoin circulating supply? Those are all things that are worth looking into. But at the end of the day, most people haven't done that because, again, I don't think it matters. It just doesn't matter. I really like that they added on DeFi Llama this chains graphs. This shows you there's some on Polygon, there's some on Arbitrum. Shows you the amount, and you can deduce a relative calculation here. Most of it is still on ETH. So I'll look at some of the stats on the other chains in a second. Looking at the transaction counts for Balancer on chain kind of just tells the whole story. For any token, you need some sort of growth in on-chain activity most of the time. Most of the time, you're not going to see price appreciation unless you see on-chain activity moving up in some way, even a little bit. So for Balancer's case, historically, this thing really kind of ranged, topped out, and since June, July, has just continued to descend lower and lower and lower. Part of that is ETH fees. Part of that is coin metrics only measuring this on ETH, most likely, and not the other chains. And that probably won't make a massive difference, but it's worth mentioning as this stuff goes multi-chain, multi-version, that sort of thing. That's certainly not helpful for price. Average transaction values increasing as well, which is indicative of fewer and fewer microtransactions or smaller transactions to bring that average down, which is, again, probably because ETH fees just continue to rise. NVT here, inverse metric of economic utility relative to price, slowly creeping up month over month since March 2021. Doesn't look particularly bearish, but again, it's not going to help you if transactions are declining, active addresses are declining, NVT is rising. That's not a bullish environment that you want to be a part of if you're a token. You need on-chain activity picking up relatively to market cap, certainly. We can also take a look at MVRV relative to price, which is a measure of market cap versus on-chain activity. And for DeFi, this is kind of nonsensical and hasn't really followed any correlation or pattern just yet, which means to me, we probably just need more data to kind of figure out what's going on here. Because the highs in May did not correlate with a high in MVRV. Maybe you could argue that there was some sort of bearish divergence here and a decline in MVRV, a rise in price. But again, that's not going to really help you signal-wise because this was a multi-month process that you don't really know where this is going to top out. MVRV was rising again, right? There's nothing here on backtesting that's going to help you. So currently MVRV is still 1.5-ish, which is telling you that market cap is still greater than on-chain activity. So to me, that indicates this thing probably goes lower before it goes higher, or on-chain activity needs to pick up significantly relative to market cap. Looking at some of the contract stats, this is on version 1, I believe. This is Ethereum, and they still have activity here on users, contract interactions, kind of rising, honestly, which is a bit surprising. This is version 2 on ETH, kind of flat, but also not super bearish. Users are declining, but still greater than version 1 on Arbitrum, kind of flat here, interactions and users. And on Polygon, users rising slightly and more users here than on ETH, probably because of fees. So I think things like Balancer really need to go layer 2 off ETH in order to thrive and not be bogged down by ETH fees. And that's Balancer the protocol, not Balancer the token. I don't know what saves any of these tokens at the end of the day, because you can look at all of the tokens and you look at this same conclusion. They have just not done well since losing speculative steam in Q1. We can also look at the PE ratio equivalent, or market cap versus annualized revenue. Balancer sitting here at a 23x multiple, meaning market cap is 23 times greater than Annualized revenue, Synthetics here at 92%, or sorry, 92x multiple. Sushi down here at a sub 3x multiple. So this makes it seem like Sushi Uni compound much more bullish, Aave, than Balancer, Maker, Bancor. But they all tend to correlate pretty closely at the end of the day. None of these, barring maybe Curve, looks particularly better than any other token price-wise. Flipping gears to technicals, this is the 5200 EMA on the daily, monthly pivots, VPVR, volume, and RSI at the bottom there. And since May, we've held a death cross on the 5200, been unable to get above this 200-day moving average, kind of forming a descending triangle now with this flat base and falling highs in September and November. So if you're bullish, you want this thing to definitely hold above 21, which is where most of the volume has been historically, but you want a bullish 5200 cross, certainly, and you definitely don't want this thing below 17. You don't want people thinking it's over because that's what they're going to start to think if you make lower lows and you lose multi-month support and you get back into the November lows of 2020. I think it may do that just naturally as you get more and more tokens pumped into the ecosystem, but as it sits now, it's certainly not turbo bullish. It's not on the neutral side of bullish. It's definitely on the bearish side of neutral, but I don't think it looks like it's over just yet. If this does break 17, I like 13.5. I like 930, whatever these monthly pivots are, or whatever they will be at the time. But 13.5 looks like a good volume level down there as well. And RSI doesn't really help you because this thing has just been ranging since May and really no volume to speak of here on Binance. Against the cloud, it's also leaning more bearish than bullish. It had a brief opportunity with the Kumo breakout here, but the cloud never flipped bullish. Ultimately, very much like 2021, you want the Kumo breakout with a Kumo twist or bullish cloud eventually to check all the boxes, all systems go. It didn't quite get there. So going forward, if you're bullish, I definitely want to see that between 25 and 28. And I'm not ruling that out for the end of the year. It just doesn't look, as it stands now, you can't just be blindly bullish expectations here. Against BTC, it's continued to slide since May. It is holding a bit of a bullish div here with lower lows in price, higher lows in RSI, sitting basically at all-time lows. I don't think mean reversions are out of the question later in the cycle, like end of the year, which is what we typically see. We're probably going to see this. We're probably going to see ETH take off to 6K, BTC to get dragged up with it. Then you're going to see rotations into other alts, DeFi, whatever. Most of the layer 2 stuff has moved around ETH. I think it's probably ETH and BTC's turn over the next 30 days. And then 29 days in, you're going to start to see rotations potentially into things like BAL. And against ETH, it's really only been down. I mean, this is an aggressive downtrend below the 50 since mid 2021, despite several bull divs. This was an ugly slide down at an all-time low in RSI, but now we have a bull div here. Lower lows in price, higher lows in RSI. And yeah, this could mean revert to 0.085, 0.01. The problem is if you're wrong, where's your stop loss going to be? You know, like if you're longing this against ETH right now, I think that's probably the incorrect move because ETH looks ready to go. But going into mid-December or late December, then it could get more and more advantageous to rotate into some of this stuff, you know, take some profits into anything that hasn't moved yet, like BAL, like Bancor, you know, some of these other exotic dexes with tokens. Lastly, let me just mention ETH BTC fund and DeFi portfolio. I trade for Techme Capital on Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM performance, allocation, all the trades I make in the trades tab down below, as well as the occasional vault I'm in here on Yearn, Comp, and Aave. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.